Okay, hello and good morning, everyone. Welcome to JFD Traders Espresso with me, Darius and Anucauskas. Today is the 2nd of January 2020. So, welcome everyone. Happy New Year. Welcome to this Thursday's morning session where we're going to have a look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, so now then, just before we jump into the charts, quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we update on a daily basis. So, I believe you can find a lot of useful stuff here for yourselves. So, feel free to visit us here on jfdbank.com. and click on the research tab right here. So right now, guys, let's jump into the charts. Now, the first one I want to touch on here is the DAX. The German index was was closed on the 31st, but it's back in full swing today. So basically, looking at the cash index right now, we are seeing that the price is slightly below this level that I talked about recently, and that's the 13,249 zone. Now, we'll be very careful with that as well, because in a way, although the U.S. equity markets managed to close in the positive territory on the 31st, now, I mean, in a way, will be quite interesting. It will be quite interesting to see if the European indices can actually drift to the upside as well, and maybe push back towards these December highs, or even to the upside. So, of course, overall, looking at the DAX index here, it is still trading above this medium-term tentative upside support line taken from the low of the 15th of August, and in a way, as long as it remains above this upside line, we will stay somewhat positive. So in a way, there could be a possibility maybe to see this one drifting lower a little bit, but again, it's a very tricky spot right now. So the way we could play this one out is, and let me just quickly adjust a few levels. Of course, this 13,426 territory, yes, we'll continue targeting. We'll continue looking at that one. But what we're going to do here is as well, and let me just put this on the quickly on the chart here. Now, what we're going to do here is we're going to keep an eye on the high of Monday, and that's near the 13,317 zone. So in a way, if we get a push above the 13,317 zone, this would place the index in the positive territory for the week, and more bulls could see this as an opportunity to join in. So, of course, the more comfortable level for us will be this 13,426 zone, but from the very, very short-term perspective, we could keep an eye on this, on the high of this week, and then aim for higher levels if that area gets broken. In terms of the downside, now, if it continues to trade below the 50 EMA here on the 4-hour chart, shown as the red line, and below the 13,249 zone, then, well, there is a likelihood for this one to drift lower towards the 13,140 zone, or even the 13,105 territory. So this area will be heavily watched, but if that fails to withhold, then we may see a drift lower here towards this upside support line for a quick test. So keep your eyes on that one. In terms of actually the upside as well, something to mention, if we do get a push above the 13,426, the next level to consider will be the 13,600 area, so which is the all-time high for the German index here. So that's why it would be quite interesting for the bulls if we would get a push above the initially a push above the 13,317, but then a push above the 13,426 level could be even a better scenario for the buyers. So keep your eyes on this one, guys. It could be quite interesting. Ethereum. Now, I haven't looked at this one for quite a while, but recently it just continues to consolidate, and but it also is kind of moving, I would say, and with the above this nice tentative, short-term tentative upside support line taken from the drop here that we had on the 18th of December. So in a way, for now, we're going to keep an eye on it, and even if it drifts a little bit lower, as long as it remains above this upside line, we will remain somewhat positive. But still, let's not forget that we're still below the 200 EMA here, even on the 4-hour chart. So still there is some possibility for some negativity. So what you could do here and how you could play this one out is you could keep an eye on this little level here near the 122.22, roughly around here. A drop below this could in a way lead towards lower levels. This is where we will aim for the this little low, the lowest point of December near the 115.40 zone, roughly around here. But if that fails to withhold, then yes, further declines are possible. So in a way, long story short, guys, even if we see a drop below this upside line, still be very careful because this is the area, the more interesting area for the sellers, the 122 or in a way the 122 zone. A drop below this could lead towards slightly lower areas. Now, in terms of the upside here, now of course, if we do get a push above the high of January here near the 132.86, yes, there could be some more upside. The only thing is probably still for us the more comfortable level for the upside would be around here near the 137.81, because this is where the price could travel above the 200 EMA on the 4-hour chart. So basically this area here, the 137.80 zone, would be a much better one to keep an eye on, and then yep, of course we'll start considering some further upside. So for now, let's see if this upside line continues to hold. If it does, then yep, we'll consider these two levels that I've just mentioned. Brent oil. Now, Brent oil, I looked at this one this week, and basically what I was saying, that after it managed to reach the 68.38 zone, the commodity started drifting lower. It started pushing down and found good support near the 65.80, and this is the level that we need a break off, which we need in order to consider a possible move lower. Now, this move lower, of course, could be still seen as a temporary correction, because overall we are still trading above this upside support line taken from the low of the 3rd of October, and in a way, if we see a drop below the 65.80, then we'll consider initially a test of the 200 EMA on the 4-hour chart, and then the 63 level, and which is near this upside support line. So that's why, guys, long story short, in order to consider the downside, we need to see a drop below the 65.80 zone first. In terms of the upside, well, again, we'll take a very conservative approach here and wait for a push above the 68.38, and only then target the upside. But then, even then, our upside could be limited near the 69.64 zone, because that's basically the highest point of September. So let's keep an eye on that one, guys, and let's see how this is gonna play out. Now, jumping into DXY, another interesting index here, and that's the dollar index. So of course, overall, you can see it continues to slide lower, but basically the index found support near the 96.36 level, and it's basically now, it seems like it wants to form something of a double bottom here. The only thing is that, to be honest, in order for us to consider this idea of a double bottom here, we would need to see the price pushing back above the 97.10 zone. So only then we will consider this as a double bottom. For now, it's just a regular move. Nothing major, but basically we can see that the index is still kind of trading above this, below this downside resistance line taken from the high of the 1st of October. At the same time, it is a bit of a tentative, don't get me wrong, but we'll keep an eye on it still. And also at the same time, it's trading below this this downside line here taken from the high of the 29th of November. So basically, long story short, guys, in order to consider the downside, well, a drop below the 96.36 level would be required. And if we do see something like that, a drop below that level, then, well, we'll start searching for another potential area of support, one of which could be around the 96 zone here, which is near the low of the 28th of June. And slightly below that, we do have the lowest point of June, and that's roughly around the 95.84. So basically, long story short, guys, keep your eyes on some of these key levels here, and especially on the downside here, keep your eyes on the 96.36 zone. A drop below this could lead the index further down. This would confirm a forthcoming lower low, and yep, we could aim for these levels for the lows of June. We can say that last year. So, and again, with the upside, this is the level, the 97.10 zone. That's what we need in order to consider a possible move higher here. But even then, we'll be very careful, because as you can see, we do have some obstacles, very strong ones, above here. And in a way, if this downside line gets broken, the one from the high of the 1st of October, then yes, this is where it could open the path towards higher levels for the DXY. So keep an eye on that one. AUDUSD. So I talked about this one on the 31st, and basically I was looking at the daily chart, because that's probably the nicest one right now. And what I was saying, that yes, the 2019 year was a bit of a down move here, a bit of a down year for AUDUSD, and maybe the bulls could recover some of its losses here during 2020. Now, from the technical picture here, you can see that from the short-term perspective, it is still, the pair is trading above this upside support line, and taken from the low, the 29th of November. And this is what I was saying, that in a way there is a potential or possibility for this one to decline a little bit lower here, especially if it drops below the 0.70 zone, and then yes, we could consider a possible test of this upside line, which in a way, if holds, could be a fantastic plateau for the bulls to join in here and push and drive this one back to the upside. So that's why, guys, for now there is a possibility for a bit more correction, but be very careful. This correction, yep, could be short-lived, and if it continues to trade, if the rate continues to trade above this upside line, there is a possibility we could see another boost here. We will consider the downside, and looking at this daily chart in AUDUSD, we will consider the downside if we see a drop below the roughly below the 0.6930 zone and the 200-day EMA here. So only then we will target further declines. So keep your eyes on that one, guys. USDCAD. Now, I talked about this one as well, and basically, well, the pair sold off heavily, and I'll stay here on the daily chart because it's, to be honest, it's a much clearer picture here. You can see that the pair drifted below the psychological 130 level and kind of closed the year below the psychological 130 zone. So you can see that it still remains lower here. Now, there is a possibility maybe we could see a further move lower, and if this drifts a little bit more to the downside, it might find some support underneath here. And let me just try to find, guys, a nice good potential area of support, and one of which could be this one right here. near the 1.2916 zone, and that's near the low of the 15th of October of 2018. So near the 1.2916 zone, this is where the pair might find good support from which it could rebound and maybe push back to the upside here. And let's not forget that we're still trading below this short-term tentative downside resistance line taken from the high of the 3rd of December. So in a way, for now, I mean, in a way, any kind of pullback towards that line still could be seen as a temporary correction. So in a way, as long as the rate remains below this downside line, any pullback could be seen as a temporary correction before another leg of leg of selling. So, well, okay. So basically, for now, guys, long story short, there is a possibility for this one to drift further south. Don't get me wrong. Let's not get too excited about a potential maybe correction, because, like I said, it closed below the psychological 130 zone, so maybe could drift further south, find support near the 1.2916, and then rebound and push back to the upside. But we'll be very careful. In case this suddenly decides to correct earlier, we'll keep an eye on this 1.3015 zone. If we do get a push above this today, for example, then yes, we will aim for that correction earlier. But for now, we're still leaning more towards the downside first before that correction. So keep your eyes on this one. Euro USD. So now with this one, it's a little bit tricky here. Now let me just jump back into a 4-hour chart. So I talked about this one on the 31st as well, and after the pair managed to drift higher here on the 31st, it found good resistance. Let me just redraw this chart very quickly. It found a resistance near this level right here, near the 1.1238 zone, from which it kind of reversed and started pushing back down. Or actually, it was more of a 39 level, so it drifted lower, and it's currently, you can see that it's balancing just slightly above the 21 EMA. Now, even if it, let's say, drops below this 21 EMA here on the 4-hour chart, we will still remain positive, especially if it stays above the 1.1183 territory. But if it starts falling below the 1.1175, then, well, we will consider a possible slide towards to this upside support line taken from the low of the 29th of November. So let's keep an eye on this one, guys, and keep your eyes on this upside support line. And like I said, for now, yes, there could be a bit of a correction, a bit more correction. The buyers might still jump in here near the 1.1183, but if it starts dropping below that, below the 1.1175, then yes, we will consider a further slide towards this upside support line. Now, in case this decides to reverse earlier, well, for us to get excited about the upside, we need to see a push above the 1.1239 zone, and this way the rate would confirm a forthcoming higher high, and the next target for us could be around the 1.1250 or even further. This is where we could start considering even further higher levels, and the next one to consider could be around here near the 1.1280 zone. So we'll keep an eye on this one. That's roughly around here, but like I said, we'll keep an eye on this in this territory here, and we'll see how it performs there. But for now, there might be a bit of a maybe a small correction here, especially if it drops below the 21 EMA here on the 4-hour chart. If it continues to trade above this, we may see this push higher earlier. Okay, guys, I really hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me later on at my trader's tea time, as always, that's 14:15 GMT. For now, I hope you have a beautiful trading day, guys. Be very careful, and I'll see you later. Thank you very much, and bye-bye.